Hi everyone. My name is Mike and you're on Anamoney channel. In this video I will try to explain why investors from all over the world are interested in the copper mining segment. We keep hearing that the policy of reducing carbon dioxide emissions and the rise of electric vehicles has triggered a price rally in markets for materials such as lithium, cobalt or graphite. Less frequently mentioned are nickel and aluminum, which are also used in most types of batteries, although most of their consumption is concentrated in other industries. However, it is very rare to hear about a metal like copper. And after all, when you switch from a regular car to an electric car, its consumption will increase by about 5 times. And yes, since the beginning of the coronavirus, copper has been showing a nice price rally. Since February 2020, metal prices have risen 60%, and the capitalization of some copper mining companies has jumped more than 250%. So, today we want to talk specifically about copper, why it is needed at all and why this metal is so interesting for the economy that it is sometimes called Dr. Copper. In general, copper has a huge number of properties useful for mankind. For example, its high corrosion resistance makes copper an excellent material for making roofing or other exterior elements of a dwelling. The low electrical resistance and high ductility allow the use of copper as a current conductor. It is the basic metal for making both electrical and network cables. Copper is also indispensable in the manufacture of transformers, electric motors, or printed circuit boards for computers. Speaking of computers, copper's high thermal conductivity allows it to be used in heat sinks, such as processor heat sinks, graphics card heat sinks, and any other cooling system. High mechanical strength and resistance to harsh environments allows copper to be used in water, heating and gas pipes, and even in hard industrial production. Copper is also used in the form of alloys such as brass or bronze for various needs. And to top it all off, copper is also biostatic and antimicrobial, which finds applications in all sorts of industries, from medicine to shipbuilding. So wherever you look right now, turn away from your laptop or phone screen, you're guaranteed to see something made with copper. Ultimately, humanity consumes approximately 24 to 25 million tons of copper annually, according to various estimates, i.e. more than 3 kilograms per person. In terms of copper consumption industries, 56% is accounted for by construction of buildings and power grids, 23% by engineering and automotive industry, and 21% by consumer goods. And now we can formulate the main economic property of copper. Look! While new houses and factories are being built, utilities are being brought to them, equipment with electric motors and computers with circuit boards and cooling elements are also being produced for them. This means that copper consumption increases proportionately, and with it the market price of copper. If the construction or electrical industry is depressed, however, then copper consumption goes down, and hence the price goes down. Therefore, copper is an excellent leading indicator for the entire global economy. For this property, the metal was even nicknamed Dr. Copper, as if it had a doctorate in economics. So why is copper a leading indicator? Because changes in real consumption of copper come before it affects GDP. For example, copper consumption is either still in the construction stages of buildings or in the production of components for industry. That is, businesses can still sell houses already completed, or cars and computers already assembled, business numbers can continue to rise, and GDP can still continue to rise. But if copper consumption has begun to decline, then all of these processes begin to slow down, and sales of final products are guaranteed to show a decline after a while. And with it, economic growth will decline. Global copper market. Generally speaking, copper is quite a common metal, so it is mined on all continents. The clear leader is Latin America. For example, Chile produces almost a quarter of all copper on the planet by themselves. The total share of the region is around 42%. Share of Asia, Europe, North America and Africa is almost equal, accounting for 15% to 11% of total production, and a bit less than that is concentrated in Oceania. Total copper production, according to various estimates, is about 24 to 25 million tons. The London Metal Exchange believes that the market has generally been in short supply in recent years, that is, that consumption exceeds production. Whereas Wood Mackenzie, on the contrary, speaks of a supply surplus. China is the absolute leader in copper consumption. Its share is more than 12 million tons, or 50% of the global consumption. Of this amount, over 4 million tons is supplied to China in the form of finished products and about 8.5 million tons is imported in the form of raw materials. Thus, demand for copper in China is the determining factor for metal quotations at the exchange. You may be wondering why study the copper market at all. As I said above, copper showed a price rally in 2020 to 2021 years. Now prices are still at historically high levels. In principle, a similar trend can be observed in most industrial metals. It is associated with problems in supply chains around the world, as well as with the risks of Russian suppliers leaving the global market. However, the situation with copper is somewhat different. Copper was the beneficiary of at least 3 different trends that developed during the coronavirus. These are the boom in the construction market, the expansion of electric cars, and optimism about supporting alternative energy programs. As we remember, copper, as the main conductive material, is required in all of these production processes. Another important defining milestone in the copper market is the political factor. From the risk of sanctions for Russian producers, to changes in tax rates in copper-producing countries such as Chile, Peru, DR Congo and Zambia. These countries are trying to accelerate the recovery of economies affected by the coronavirus by raising mining taxes. Let me remind you that these countries account for half of the world's copper production, as well as 1/3 of all new announced mining expansion projects. Obviously, any negative scenario for companies from these countries will lead to higher production costs and reduced investment in new projects. This will lead to higher copper prices and increase the deficit in the metal market in the future. Recently, Chile's finance minister, Mario Marcel, says the plan of tax changes has 2 components. One is an ad valorem tax between 1% and 4% depend on production capacity. The other is a tax rate between 2% and 32% on companies' profits. In Peru, similar measures were expected after President Pedro Castilla pledged to literally end the privileges of copper producers, but the issue was postponed until 2023. The Chinese authorities also showed high concern about rising copper prices. In the second half of 2021, the country's authorities have conducted 3 waves of sales of industrial metals from state reserves, which caused the stabilization of quotations after a rapid growth in the first half of 2021. Copper price forecasts are changing rapidly, following the actual changes. For example, the World Bank in its April issue of Commodity Markets Outlook forecast an average copper price in 2023 at $9,700 per ton, but in the next similar edition in October has reduced the forecast to $7,300 per ton. I collected the main current forecasts of analysts, dated by the end of 2022, and this is what comes out of it. I would like to draw 2 main conclusions. At the end of 2022, the consensus forecast could be considered quite positive, but amid news from China about the abandonment of the zero-tolerance policy for the coronavirus, this positivity has actually already materialized in early 2023. The forecast for 2024 is also very optimistic. We will discuss why all analysts are waiting for a worsening deficit in the market and the corresponding price increase in one of the next videos, so be sure to subscribe to the channel so you don't miss anything. The second point is that the price level of $9,000 per ton can be considered extremely favorable for producers, whose production costs are on average $2,000 to $3,000 per ton. Here it is worth remembering that this is not the full cost of sales, but the production cost. Therefore, the companies whose profits are not eaten up by other costs and taxes, just keeping copper prices at their current level could become excellent dividend stories. Additionally, it is important to note the exchange rate factor. So over the past 10 years, the Chilean and Mexican peso or Peruvian sol have fallen against the dollar by 30% to 50% on average, which means that companies from these countries actually cut their expenses in dollars year after year. I am referring to expenses such as wages, energy, or domestic debts. All of these factors allow us to talk about good prospects for this market, and therefore about the potential interest of investing in copper mining stocks. I hope I was able to explain why it is always important to follow copper prices, and why it might be interesting to follow copper mining companies now. Why this rise in industrial metal prices can't be called a new supercycle I explained in the previous video. Be sure to watch it, there are described a lot of interesting economic theories. If you are interested, please like this video and I will release a sequel to this video, where I will describe in detail the processes in the world economy that will lead to a deficit in the copper market in the near future. Spoiler, there will be a lot about renewable energy. Goodbye everyone. Write in the comments if anyone invests in industrial or precious metals, what did you choose and why?